Hello, welcome back to our series on different types of life insurance. Now that we've discussed the different types of life insurance, I'd like to explain a few of the most common riders that are available to add on to life insurance policies. Note that because riders provide an additional benefit to you as a policy owner, an extra premium could be charged. So let's dive in. First, return of premium. This is specific to term policies. You can pay a significantly higher premium to receive your premiums back without interest at the end of the term, assuming you do not pass away during that term period. So let's say you're paying $2,400 a year for your term for 30 years. At the end of the term, you would receive $72,000 back. Versus paying a term without that, you would pay a lot less. Disability waiver of premium. If you became disabled during the life of your policy, the insurance company covers your premiums with this rider, typically until you're 65. We recommend this for all our term policies and some permanent policies. The reason that we don't typically recommend it on all our permanent is because the cost is much higher on a permanent policy because of that higher premium. But disability, I always tell my clients this, is much more likely to happen to you when you're younger versus prematurely passing away. So that's why we recommend it often. There's also a children's rider. You can add your children as riders to the policy to have a small death benefit on their life. Usually this does not require underwriting for them. It's typically up to $25,000. Think of it for final expenses. We recommend getting a separate policy, however, on your kiddos, because this usually falls off, that rider falls off when your child turns 18. But if you get them their own policy, it will last until, if you get them a permanent policy, it'll last their whole life. Chronic care rider. This is specific to permanent policies. You pair this with an accelerated death benefit. So what that means is if you are terminally ill, you receive a death benefit early. But with the chronic care rider, if you experience a long-term care health event and you need assistance, you can receive a leveraged and accelerated death benefit, or accelerated benefit rather, from the policy that will pay for these expenses. Examples of events that would trigger this benefit would be a nursing home admittance, mental incapacity, so just Alzheimer's or dementia, inability to complete 2 out of the 6 activities of daily living, which are just daily things that you need to do to take care of yourself. So consider this as adding a long-term care policy to your life insurance policy. So those are some of the most common riders. Of course, there are many more, but I just wanted to highlight some of the ones that we see and recommend more frequently. We look forward to talking to you next time about, in practice, what does this all mean and how it all fits together. Look forward to seeing you in our next and last video.